There is a method of thinking about investing in the stock markets that is quite different from the way the majority think. And this is what we call a contrarian philosophy to investing. Before we get into understanding more about the contrarian thinking, I'm going to tell you a story that nature teaches us about contrarianism. There is a fish called salmon. The salmon fish is essentially born in a freshwater lake somewhere or a freshwater river and then flows downstream until it reaches a saltwater sea. It then thrives in the saltwater sea, grows, becomes a mature fish, and then it journeys back upstream against the flow of water to reach the fresh water for it to spawn the next generation. So really the salmon has to use all the navigation skill to move downstream. Obviously rivers flow through gorges, they fall from great heights. So salmon must use all its skill set to swim upstream while the water is flowing down. So it navigates beautifully to make this happen. It's one of those rare natural phenomenon that has great learnings for us, especially in areas of contrarianism. Now here is where contrarian investing is so similar to the salmon. The contrarian investor is a species different from the regular investor who flows with the market. He thinks differently. Now what is contrarian thinking? Contrarian thinking is thinking a little different from the flow of the market, almost taking an opposite view at various points in time on the belief that the market has overdone itself. On account of that, there must be a reversal that happens at some point in time. That's what a contrarian belief is. Now, as per a contrarian belief, the investor will set up positions that are very different from the flow of the market and wait for the market to realize itself, and then when that happens, he or she will make all the money that they need to make because they have bought in an overcorrected market, an overcorrected stock or a fund, and therefore they stand to benefit from it in the long term. Now that's really contrarian investing. The genesis of contrarian investing has its origins to the efficient market hypothesis. Now, the efficient market hypothesis used to typically define the mentality and the assumptions behind stock market investments. It consisted of the fact that believed that all investors invested rationally. It believed that any information that was coming into the market was rationally fed into the price, and therefore investors were well aware of what kind of decisions they were making at any given point in time. There was efficient allocation of capital that was happening by investors at all times. While individuals may be biased, the market as a whole was very, very intelligent. These are all the fundamental beliefs of the efficient market hypothesis. Unfortunately, we now know that investors are not always rational. Most of the time they behave with emotions and therefore more irrational than rational. The allocation of capital is not done in the best interest as well because they get swayed by emotional reasons. Third, investors invest based on information that they have with them, not necessarily the information that's available in the marketplace. Last but not the least, markets are nothing but a collection of individuals. So what afflicts, what are the biases that individuals have will also be the biases of the markets. Now all these means that the efficient market hypothesis was fundamentally flawed, and therein came the logic of a contrarian investing which sought to correct some of the errors of the efficient market hypothesis. Therefore, an investor could choose to go against the market if he so believed that the market was at that point in time not in the best of place, and he saw greater value in something else than what the market was going after. There are principally three big challenges in making wealth by going contrarian. The first up, in order to get your contrarian bets right, you must have a firm view of the intrinsic value of that portfolio or that stock which you're buying. Only if the stock is either lower than the intrinsic value or the higher than the intrinsic value can you really create wealth for yourself by taking a contrarian bet, either selling or buying, whichever way. So one needs to have a very, very good understanding of valuation and the intrinsic valuation of that portfolio. Second, timing. It is said that the markets can remain irrational for far longer than you can remain solvent, which means you could take a contrarian bet and hold on for many years before anything happens at all, if at all it happens. So do you have the stamina to hold on to your investment decision and wait for whatever time it takes for the market to see your view? That's the second. Third, standing alone against the flow of the market is a very, very difficult decision. It is something that we as humans are not used to. For time immemorial, we have always gone with the crowd. Standing away from the crowd, holding on to your decision is a very, very difficult task. If you can master all these three things, then you will create wealth on the contrarian approach. Now, how to get it right on your contrarian investing ideas? These are the 5-step process. First up, create a screener and identify all those ideas that you believe are contrarian in nature. Create a schedule of investments that out of these which you want to pursue. Third, go about the process in a slow manner. You need not build up all positions overnight. You can build your positions over a long period of time as you have money. So it's not something that you need to get it right immediately. Fourth, you need to be patient. You need to have the ability to hold on to your investment in the long term. Last, be prepared to look stupid before you appear intelligent when the market changes. So you must have a self-conviction in what you're doing rather than trying to believe that the market will immediately follow your cue. It will take time, and in the time when you have made the jump and the market has not realized value, it may appear a little bit stupid because the other investments will be going up and your investment may not be doing so well. It takes a special amount of courage to stay invested in these times. If you follow these 5 steps, there will be great amount of wealth that you can create in the contrarian philosophy. However, as a retail investor, should I put all my money in the contrarian philosophy? The answer is no. For every 100 rupees that you have, my suggestion would be to put about 70 or 80 rupees into the regular flow, the conventional flow, but look at 20 or 30 rupees on the contrarian side if you think that's a great idea. Between these two, over long periods of time, you should see reasonable wealth getting created. Now, if you're an investor who's not used to the stock market, there are contrarian funds available. These funds invest into ideas that are not so popular at this point in time, but if you wait and stay invested reasonably long term, you will realize value. And a way to create wealth in contrarian funds is essentially through a systematic investment approach. And SIP is a great way to create long-term wealth in the contrarian story. I'm sure that you as an investor can benefit from being contrarian to the market. It just needs a little bit more effort and a little bit of luck, and I'm sure you can create wealth being a contrarian as well.